Good morning, traders. It is Friday, August 30th. Taking a look at the charts, we got the SP 500 30-minute chart here on the left-hand side. If we zoom out, you can see our trend analysis chart from green bars to orange to red. We are still in a red market. We're very close to the market trend flipping to the upside. But if we take a look at the short-term cycle analysis here, you can see more or less this pink forecasted prices. We've got cycles starting to top out here where we've seen past cycles move up. You can't see the price, but here's one longer term cycle. Here's another longer term cycle. And we're into this little short term topping phase. Just like we saw over here, there's a lot of shorter term intraday cycles as well within there, which is why we get the choppy noise. But overall, the market is set to gap higher, right up above these previous highs. And it's going to be interesting to see where the day closes and how the momentum of the market starts to play out today and more or less on Tuesday next week after the long weekend. So it's going to be pretty wild. If we look at the daily chart here on the right-hand side, we've got these series of lows. We've got these highs here. The market is flirting with the blue trend line, which is the 50-day moving average. Institutions like to buy or sell at the 50-day. When you're below it, they usually are starting to unload positions because price acts as a resistance area. So the market, this is a pre-holiday trading session. Usually we see the market move higher on pre-holidays. Usually we see big money move out before the holiday weekend, and then you see it drift higher just before the holiday weekend. Big money is already usually leaves a bit early. We'll see if selling steps in today. We are flirting with an extreme high here, resistance level, and again, cycle highs. So depending which way the market breaks here, we're going to start to see some pretty big moves. If we break and hold to the upside, stocks I think are going to have a pretty strong relief rally. This big pattern is building up a ton of energy that whichever way it breaks, it's going to be pretty powerful. And the bias at this point, pre-market, is still that sellers should step in and drive prices down. And we're looking for a breakdown. But again, really, until we have a breakout of this range, we're stuck in this August potential consolidation topping phase where we don't know which way it's going to break for sure, but it'll be very significant when it does happen. Now, depending which way stocks go, if stocks break to the upside, we are going to see metals, safe havens really pull back fairly sharply. If we look at the cycle chart for gold, it's showing that we're going to continue to see some chop. Not a real clean, strong market moves. It's showing more or less a bunch of mixed, very short-term cycles in here, some up days, down days, nothing really prolonged. So we're expecting some continued chop in the market, and if the stock market rallies, we're going to see gold miners and gold break down fairly sharply. We could actually see them come down towards this 50-day moving average. Gold would be around the 1460 area going forward. So we have to see which way things break, and if the stock market reverses and sells down, and we see big selling step in today or over the next week or so, we're going to see metals continue to muscle higher, safe havens, bonds, all those things go higher. So we're at this kind of holding point. We're in position for the current trends. We're letting the market do its thing, and we just have to wait until we start to see some breakouts. If we get trend reversals, we'll have to get out of our plays. If we get the trends we're in position for, we ride them for large gains here. So that's where we're at. Let's take a look over at, let's pull up silver real quick. Silver pushing up, testing yesterday's highs. I'll just move to the daily chart here. You can see yesterday moving up. We've got this blue resistance line going back on the chart. Tagged it almost yesterday, sold back down. Today it's pushing back up. There is a lot of money moving into silver. No matter what, it's bucking the trend and continuing to grind higher, but this is a really critical level, and we're starting to see some volatility in price, much similar to when we start to see some big selling step in, like over here and over here. And reversals on big price action. It typically means we're getting into a consolidation phase, either a consolidation or some type of topping phase. So that's where we are with silver. And of course, bonds, gold, silver, they've all reached more or less our upper target. Bonds, we almost hit our first target. We probably should have pulled some money off to lock in some gains a session ago, but overall, they're all ready to kind of have a pause here. But if the stock market breaks down, we're going to see them continue to go higher. Looking over at gold miners, GDX, if we look at these Big down day yesterday for them, pulling back to the 20-day moving average. They've been choppy for the last little while. Again, continued chop in the market for gold miners. They're really not oversold until we get down to this lower hash mark here. So if we do get some type of flush down to around 39.50 in the GDXJ, then the market might be getting into this oversold territory and could be an opportunity to stick a toe in the water because this is a series of bull markets, bull flags that have been forming here, consolidations. It's starting to get a little more toppy where we're starting to get rallies, sell-offs, potential double top maybe here in the market. If it does start to break this low here, then things are going to get pretty ugly. We could see that a deeper correction in miners while the stock market rallies to new highs. Looking over at energy's having a nice kind of pop here. This is natural gas. If we look at the natural gas chart, continue to see some sideways chop, a little bit of downward bias. We'll see how natural gas plays out over the next couple of sessions. More or less, we've gone from red bars, which is a downtrend, to orange, which is neutral, and now we're starting to turn up. And if natural gas can hold up, if we see natural gas hold its ground here, over the next couple sessions while this kind of bias, the cycle is down, then the next upward move, since we're in an uptrend, should be the next leg and the breakout to some new highs. We've got a pretty significant resistance level across these highs here, which we popped for one day, but we closed back below it. We might form a little bull flag here and get that second run up and test this high right over here, which continues on to these other highs and consolidation through this area as well. So we are in position with natural gas. It is pulling back today about 1.35%. And yesterday was a nice pop with inventory numbers, and usually news-based pops fizzle back out a little bit. So this pause and pullback is still very bullish in the grand scheme of things. Looking at crude oil, down 0.6%. Crude still stuck under this short-term analysis. Let me just, you can see here we got a bit of a downward bias for crude over the next few sessions here. We'll see what crude does. If we were to look at this chart, if crude can hold its ground up here until this cycle low comes in, because there's another cycle coming up here, then we could very easily see this start to be the breakout of this move, and that would be right across these highs here. So we would consolidate a little bull flag here, which is, here's the flagpole, here's the bull flag, and the flagpole usually means it's a halfway move. So the difference, the distance between there and there is the breakout distance to the next upside target. So if this is a consolidation and we can hold our ground, we could very easily see crude pop back up to that $60 level very quickly based on this strong momentum and more or less this type of washout low, a basing formation. It's going to have some pretty nice upside pop if it can break out and get up there. Looking over at, let's pull up the US dollar real quick. UUP is the ETF that mimics the price of the US dollar. More or less, we're looking at potentially a little bit of weakness in the short term. It is trading relatively flat this morning, a little positive, but overall, we are coming down to a potential cycle low here today, meaning we've got an upward bias over the next couple, 3 sessions in the dollar. If you look at this price chart, we've got this kind of bullish wedge price action where prices rally, bull flag, rally, bigger bull flag. This is the bigger bull flag, which we broke out. This distance here is where you measure the next breakout move, breakout move. You get the same size pop. So we've had a nice multiple bull flags with measured moves. Again, here's the halfway point and the second half. All these are fractal. All these time frames are coming into play, and now we're forming what could be a much larger bull. It's not a bull flag, it's more of a pennant formation, a bullish wedge, which is still the same theory. This big move, you break that to the upside, and it's the same size move up. So if we start to break this resistance level, we could see a very strong rally in the dollar, and that would put definitely a downward bias in metals. Everything that's overbought, everybody's piling into metals. We could see a lot of those gains wiped out and correct, which is my concern going forward here at this point. Bonds would be somewhat protected a little bit versus the metals, which is why we are in bonds. We're about managing risk, not going for some huge swings with big risk and volatility involved. We're trying to navigate this time. This is going to be some pretty big moves over the next. Um, Really, we've been in huge moves for the last month, but we're going to see much larger moves continue for another month or two at this point, and we got to really manage our risk. Things are moving 2-3 times the amount each day, which means we need smaller positions, and it carries a lot more risk and vulnerability. Anyways, that's it for now. We'll talk to you in a little bit. Bye bye.